on the front line for us all the time, fighting for flood insurance and staying on top of this very important issue that is so detrimental to our industry and to our lives and our housing and everything else. So I'm going to go ahead and just pass it over to these ladies and let them take it away.
Thank you. Okay, they're getting the slides, but we know we only have 45 minutes. And believe it or not, yesterday Christina and I traveled to both the Broward office for the Miami Association and to the headquarters office. And we gave two-hour seminars, and the time absolutely flew. So we want to make sure that we've condensed this so you'll have at least some information. We know that the level of everybody's knowledge in flood insurance is a little bit different, and I can tell you, I've been doing this for years, and there's still things to learn. It's like peeling an onion, and I'm only like halfway through the onion. So we're going to move quickly while they bring this up. So let me just give you a little background while they're getting the slides. And that is that in the United States, there's over 5 million flood policies. And the people that have flood policies, it's mandatory. Most people do not buy flood insurance unless it's mandatory. And that means, I'm sure many of you have come across it, that if you're in a high-risk zone and you have a loan, that your bank requires you to have flood insurance. So of those 5 million policies, I can tell you that does not include what really needs to be there, the ones that have their homes paid for, that are also in high risk. We sort of calculate that is it would be double the amount of policies that we're seeing. So those are the people at risk should we have a flood. It encompasses 22,000 communities across the United States. And if you have a flood, the average cost of repairing a home for a flood is $43,000. Now, how many have seen what a home looks like down here when a flood has occurred? It's devastating, isn't it? I mean, they come in wherever the level of the water is and they cut the drywall way above there, so the drywall's cut, everything below is gone and out to the street. So your appliances, your bedding, your clothing, the toys, everything is gone. And so realistically, $43,000 doesn't really replace all of it, but it's, that's the average cost that we have. So now let's bring this back to Florida. Florida is the largest state at risk, and we have the most amount of policies. We have almost 1.8 million policies. We represent somewhere between 35 and 40% of all policies, depends on what day you want to look at how many policies are out there. And again, that's the only ones that have it are the ones that need to have it. It's not the ones usually that pay cash. Now, I wanted to bring home a couple of things. I talked about nationally there's 22,000 communities, in Florida there's 467, but the most important thing, there's some key points that Christina and I want you to take back with you. And that is, X is a flood zone. So many people say, well, I live in an X and I don't have to have insurance. That's right, you really don't. They're not gonna make you do it. Lenders aren't gonna make you do it. But that X zone is so vitally important for people to consider to get their flood insurance. And let me tell you why. The recent floods in Baton Rouge, Louisiana, that happened last October, that devastated so many homes, 50% of those properties were in an X zone. 80% were either underinsured or uninsured. Underinsured meaning they didn't think to insure their belongings, their bedding, all of the things that had to be replaced for families. So think about that. 80% did not have insurance. Does anyone know how much money you get from the government when you have a flood and no insurance? So I heard one that's the closest, about $2,500. So now you take a homeowner who really has to make their mortgage payment, they're strapped as it is with insurance and everything. Now they've got to take out a loan. They have to take out a loan to fix that $43,000 number. And that doesn't include probably bringing everything back to what they had. So if there's one takeaway, and there's going to be a few today, please make sure when you're working with your buyers that you tell them what the cost is. Does anyone know the cost of X? It's inexpensive. It's like $450 a year if you live in the home. If you're an investor, there's a $250 surcharge, so you're talking about a $650 fee. Why do we have the surcharge? Because the government said so. They just said, we need to collect money, we're putting a surcharge on the homes that are not owner occupied, and that's why it is. But you think about your $450 policy and how many months you would have to pay before it would ever equal the $43,000 is probably one of the best investments that someone can make. So I'm going to now have Christina sort of go over some questions, and we can head from here.
Thank you. Thank you for putting that together, Maria, and giving us that overview. I'm going to turn this off again. Okay, so let's start with some of the basics. We have in the room, I think, some very new agents, some agents, Neil pulled the room earlier, so we're going to give you guys some basics. Obviously, some of you already know this, but we want to make sure everyone's on the same page. So we'll go through it quickly. I know we only have about 40 minutes. So just give us an overview of what are flood maps.
Okay, a flood map, we all hear you're in an A, an AE, V, or an X. So let's just imagine, and they're like little scribbled lines all over, but let's just take that as an oval, okay? So they've done a mapping and they say, in this flood zone, we're gonna name it AE, okay? And it does not matter in this flood zone whether you're on the waterway, you're inland, or you're in Indiana. AE is AE, and you're going to pay the same rates no matter where you are. So the National Association of Realtors, NAR, did a study a couple years ago by Milliman, which are very accredited actuarials, and they basically, after you read the long 100-page report, said the maps are wrong and the rates are wrong. And they are. They're absolutely wrong, because here's what happens. Everything is pooled within this zone the same, but in that zone you may have homes that, does anyone understand what BFE, below flood elevation? Okay, so you don't know in that zone who is at that level, higher, lower, whatever, but everybody is rated the same. So the only way you can get out of it for most of them is you have to pay to have an elevation certificate, because the burden is placed on the homeowner to have an elevation certificate to see where your home is. So the sad part is, that's what we have. But what we really need, and it's one of the things that NAR is pushing with Congress, is to do what's called LIDAR mapping, and it's LIDAR. And what that is where they fly planes over and they beam down and they know building to building what the elevation is, to be able to make it more clearly defined that a homeowner knows what their elevation is. And to also be able to have some simple way that a homeowner and us can find out what flood risk you are in. Because right now, any of you that know how to find the flood maps and stuff, it is not easy, and it sure is not easy for a homeowner.
So I buy a house and it's in flood zone AE. When I go to sell it, am I still in flood zone AE?
Okay, so when you go to sell, when you are going to a listing, and we all have the information, what zones are available, or it tells you on your tax roll or wherever you're on your certain MLS. When you go there and you know it's there, you need to be asking that seller for certain questions, and you need to put that information up on MLS. So number one, an elevation certificate. What do they pay for flood insurance? We have our disclosures that certainly ask if there's been flooding or whatever, but you need to have that information when you're doing it. And if you're working with a seller, we'll just go on to even the next thing, that when it's time, as a seller and buyer are working closer to getting their closing, and they've talked to their insurance agents, you do not have them go buy flood insurance from their local agent, because if they are grandfathered for whatever reason that they're there for that new person to get the rate, you have to transfer from the seller to the buyer. The seller can transfer that. And let me just give you, I should give them a short story that happened to me. This one property, that Murphy's Law, this is one of my investment properties that I've had. So when I went to sell it about a month ago, I am in AE and I was grandfathered in, and I knew I had to transfer. Now I'm the realtor owner, the buyer is another realtor. So the other realtor calls me and goes, Maria, I can't afford the flood insurance, it's much more than you said. And I said, well, what are you doing? I have to transfer it to you. So I said, let me take care of this. So I email my insurance company in the subject that says flood insurance transfer. In the body it said, I am selling my home, I need to transfer my flood insurance to the buyer on such and such date. I get an email back from the insurance company that said, we can't transfer insurance. And knowing what I know, I said, how is my buyer going to get grandfathering? The email came back, oh, I didn't know you were talking about flood insurance. Now,
So imagine if that's an everyday realtor and they tell their seller, okay seller, go call your insurance agent and have them transfer. And the insurance agent says, I can't transfer, and then your seller comes back to you and says, oh, we can't do it. That therein could just kill your deal, right? So you have to take it a step further. Luckily, she's the realtor, but even the realtor on the other end didn't understand that she could transfer and keep the rates that she had. And so we, as realtors, have to take it a step further, right? Ask your seller, what did your agent say? Go back, use these words, right? We need to say grandfathering, and we need to be speaking about flood insurance in particular. And it's those small things that will make a world of a difference. And you all know that when you're transferring properties, one small thing in a deal can make everybody go a little crazy, right? It can kill a deal, make someone really emotional. So you have to stay on top of those things. So tell me, what is grandfathering though? And give me a little bit more information about the types of homes that when we talk about grandfathering.
okay, and I do want to say that if you didn't know to do that, the deal could just be gone, because my buyer was not willing to pay what his rate would have been. And I did tell him, you need to understand these rates will go up, and he was like, yeah, I'll be fine. So, okay, just wanted to make sure you know. So the, what was it? Grandfathering is, okay, so most of you probably know, but just, I want to make sure everybody's on the same plane. You'll hear pre-firm. Pre-firm is 1974 or older, and they are grandfathered in. And then there's the post-firm that is after that time period. Now, many of your post-firms, which my house was in 2004, when you purchase it, I wasn't even in an X zone at that point. And 2 years ago, the maps were redone, because they do redo the maps. And that's when I found out I was in an AE zone. When you get newly mapped and you are in a high risk, you do get grandfathering. So I had the advantage of grandfathering. So that's why, even though, you may purchase a home and it may be nothing, and then it gets remapped, and then you're in a high risk zone. So you can never count that it's gonna stay the same. I know in Broward County, we had a couple of years ago when the new maps came out, all these homes were lifted from high-risk zones. And my feeling was this: they were all happy, they're not having to pay these rates. But here's the thing, okay, so right here, from Christina to I is AE, and from there forward is X. Well, I know this, that water doesn't go, I can't go past AE. Okay, because X is low risk. Yeah, so I'm just telling you, everyone needs to really protect themselves.
So how can we help our buyers protect themselves when they're purchasing? How can we help educate them besides just, speaking about flood insurance? What else can we do?
Okay, how many of you, when you're working with a buyer, do you put, a buyer always goes, what's it gonna cost me to purchase a home? What are my expenses? How many of you estimate flood insurance in that?
Keys
A
and
couple. She's very proud of her.
Key West, I like it.
Okay, the keys, not Kai's. Sorry, it's been a long couple days.
No, the keys, they do that.
Right. I'm gonna tell you, you really need to do that. Here's two things that happens. Number one, if you know they're sort of looking in an area that's X, so use the $450, divide it, a $50 a month payment. That'll be a little over, but it'll compensate for other things. It makes a difference, and here's what happens. Number one, you've made them aware that basically Florida's in a flood zone. It doesn't matter where you live. It'll give them awareness to ask the question, because when you are purchasing, they do not want to have that sticker shock when they see what their flood premium is going to be. So I'm going to tell you, I think as our due diligence to do that, I had a first-time home buyer I was working with a couple months ago, and it really took them out of the market. They go, you know what, we can't afford that, and then if something else happens, we'd be in a high risk. I would much rather that happen than I've driven them in my car for weeks to find the right house with the multi-offers, and then they can't get it. So I really encourage you to make sure that you do that.
Do you have the conversation about possible maps changing? Do you have that conversation with your buyers before as well?
I tell them, first off, when I do this estimate, I base it on an X. I go, we may have to revisit this depending on where you're going to be. And I also tell them, there's no guarantees. It's like school zones or different things. Things change. Sea level rise, whatever's going to happen, we don't know, but the best thing you can do is be the source of the source. Get them the information.
So talk to me about what is a flood.
Okay,
Backtrack.
the definition of a flood is either 2 continuous acres of flooding or your home, if you're the one that flooded, and one other. So it needs to be your home and the next door neighbor home. And that's really the definition of a flood, but it always gets a little tricky. But that's what FEMA has in their guidelines.
So it could get tricky if my house is, pre-1974 and it's sitting on the ground and my neighbor's is raised up and the land floods, but because my neighbor's raised up, their house didn't flood, just, their town's, is that a flood?
Well, you don't have another one to have for this second one. And that's the problem, mitigation is a whole nother issue. Keys are very aware of mitigation and what you need to do. It's a big issue. Danielle and I were talking about mitigation. It's a big conversation in Washington right now because grandfathering, there's some proposals going out there right now that in the draft legislation, and I have a phone call tomorrow that one is in 4 years grandfathering goes away because of the debt of the NFIP, the $25 billion. They take in $3.3 billion a year and they pay out $5.5 billion without even a disaster. Well, I don't know how many of us can stay in business and we lose, that much money a year. So they're looking at that. So one of the things is grandfathering. The second one is no more coverage for homes after 4 years that are being newly built in high-risk areas, and no coverage for homes that are above $1 million. Now, it makes no sense. That last one makes no sense because they only cover the first $250,000. NFIP, the National Flood Insurance Program, only does that. And for me, I don't think NFIP is insurance, nor do I think it's a program. It's not insurance as we traditionally know, that it's going to pay for your living expenses or anything like that. And it's really not a program because they're not organized in a program. So, the best thing for Florida right now, Florida's in one of the best positions of any state in the country, and we are leading the way, and that's with primary private market insurance. Now, it's not going to be for everyone, but it's going to be for a lot. Right now, there's 13,000 policies in the state of Florida, and I think we've got about 14 carriers that have who are really interested in doing private market. We have to wait for 2 things to really make it sort of flourish to the point where we would be happy, sort of like back when Citizens had to depopulate here in Florida, which was very painful, and we can get into that discussion, but it did bring private market back to Florida so we could get hurricane insurance. So with being able to get it, we have to have lender approval, because right now the only thing most lenders look at is that it's NFIP. And number 2, grandfathering that we just spoke about. So if the insurer goes underwater, you need to get back into the NFIP. You don't lose your actuarial rate, or for whatever reason the rates get so high with private. So we wanted to have some flexibility to be able to have that. But I will tell you, the other states now, we've been championing this up in Washington for a couple of years of what Florida had, and people are just sort of looking at us. Now they're looking for our draft legislation so they can have it, because on September 30th, when NFIP expires, and we don't know what it's going to look like, but last time that cost us 40,000 homes a month, so it's 10,000 a week, And each home represents, according to NAR, about $53,000 of revenue into a community. So that's all the purchase, remodeling, the people that work on your home, so they've got money to go to restaurants and get their hair done and whatever they do. It's a lot of revenue into a community. And also, that if you are the unlucky person that your policy renews on September 30th or October 1st, you cannot renew because there's no NFIP. So let's think about last year, October 3rd, when Matthew was going to come right down the coast of Florida. It could be absolutely devastating. And that's the example I use to my congressman when I go see them, going, you know, I just want to put this into reality of really what could happen. And, you know, when everyone was preparing their homes on October 3rd, I was literally freaking out going, I wonder how many X zones have insurance. Because I knew what's been going on and happening. And I'm thinking, yeah, Christina goes, only you. But I really was, because I'm thinking these people don't really realize what they need to have.
So what if I have a customer who purchased a home in an X zone, decided not to get insurance, and purchased that home based on what they could afford? So, okay, I know I can afford this much a month. And all of a sudden they end up in a high-risk flood zone, and it looks like they can't afford their home anymore. Is there any mitigation, any options for them?
Yeah, we were talking about just as, and I didn't continue, so thank you, the mitigation, you know, anything from how many have put smart fence, have had, you know, consumers put in smart fence. There's different mitigation, but then there's also the raising of the home. That's at about between 180 and 200 a square foot. And so the dilemma is this, that, you know, you go to raise it and a home is worth, and up for, I'll just say 300,000. So it's worth 300,000, and now you're putting about another 200,000 in simple math to lift it. How do you get that money out? You know, you can get grants, you can do, you know, and we're working on being able to do that. But how do you do that? You know, how does someone do that? And then if you do the buyouts or different things in communities, there's all sorts of chatter going on, so I'm just throwing ideas out. You know, that's collateral damage to a community. They're not collecting property taxes anymore. So, you know, this is a very complicated question. You know, these problems were made way before even I was born, you know, and we're trying to fix it. And it's really not easy.
You had a great story about a couple that purchased a home that ended up in high risk.
So yes, this is a story. You know, I hear, and as I've said to you, that the, you know, NFIP declares a consumer guilty, and you must prove your innocence. There's no way about it. So one of the most touching stories that came to me was of a family, and their name's Davey, who's a chef, and Linda and his wife. Linda, his wife, and their children. So they were very excited. They were buying their first home, and it was a distressed foreclosure. So, you know, they knew they had to go through a lot of hoops, went to their insurance company, found out from the insurance company that they were in a floodplain. So the insurance agent said, oh, you need to get me an elevation certificate and all the things that I need. And so Davey quickly got everything that they needed. The insurance agent called him and said that you are in a risk zone of $561 a year. And he said, Davey and his wife said, you know, we can afford that. They went to closing, all excited. So they got really busy once they closed, and they had to put massive amounts of money into this house. It wasn't even livable. So they were, you know, working very diligently and hard to make this happen. And 2 months later, they received a call, a devastating call from their lender. Hello, Davey? Yes. This is your lender. You are in a much higher flood zone risk, and you are going to be paying 10 times a month more than what you were estimated because your insurance agent lied to you. So they were absolutely in shock. So Davey called the insurance agent. Insurance agent was no longer with the company, and all the insurance company could say is, I'm really sorry. So Linda decided to call the lender to see what they could do because they could not afford to pay the insurance. They were going to go into foreclosure. The home that they just bought, fixed up, they're now going into foreclosure, and the lender, it was on deaf ears. Determined to not lose this home for their family, They went through all the hurdles from the bureaucracy, contacted 2 US senators, 2 US congressmen, a state senator, their local congressman who led them to their state insurance commissioner, who then got them to the FEMA advocate in Washington, D.C. Now, the FEMA advocate was put together between Congress and NAR to help alleviate mapping and rating problems. So the FEMA advocate went ahead and was able to negotiate a $10,000 deductible for their insurance, had the lender wipe the debt for the non-payment of flood insurance, and save this family from losing their home. Now, I want you to think about it. That problem's not done because this is a chef, and I don't know how much he's going to be able to afford $10,000 when that happens. But this is a family who did absolutely everything right, everything. And through no fault of their own, because we do not have easy ways to look at maps and see your risk, they were losing their home. And I don't know how many people would have gone through what they did to be able to save their home. And it's a story I know when I tell in Congress, because we are champion for them to do the LiDAR mapping and to get easy access so you can determine your flood risk. You can as a realtor and the potential homeowner or the homeowner, so that we all know, at least on that date, what our potential risk is.
Perfect. I think it's a great time to give way to Danielle over here. For those of you who don't know Danielle Blake is the Miami Association of Realtors Senior something Director Government. Just a senior. That's her official title. Everybody. But she knows a lot, and she has some really great news to share with you all about community rating systems.
I'm going to be very quick, just to explain community rating system, otherwise known as CRS. It's basically, we talked about private, the homeowners mitigation. This is the community's mitigation. So these are the municipalities, the county, what efforts is the government doing to mitigate against flood. For the efforts that they put forward, they accumulate points. The more points that they accumulate, the residents get a discount on that. So I didn't bring enough for everybody, but I have some charts up here. And the big thing that I want to tell you is that 2 years ago, we spoke very similar at this conference. We talked about the CRS and the things that you could do. Monroe County was not participating in the CRS at the time. In fact, Monroe County had been kicked out of the CRS, to be quite blunt and honest with you. They had hired a consultant, they were working on it, and what I wanted to come to you and tell you is that they got back in last year. Monroe County, if you look on the very back of the chart, is now a Class 6. So yes, thank you. Class 6.
Big deal.
So for all those property owners in a special flood hazard area, which are the A, the AD zones, they receive a 20% discount on their flood insurance. If you're in a non-special flood hazard area, which is the X zone, you get a 10% discount. Key West was also not in the program. I believe they were also kicked out. They have gotten back in, they are a Class 7 now. The special flood hazard area residents property owners receive 15% and 5% for non-special flood. So just in the last year, what I told you, just those two, property owners have saved over $5 million by the efforts that the community has put forth through mitigation efforts. So I want to share that news with you because that is 2 years ago.
So stay up here really quick. So if I'm a realtor and I want to get a little bit more involved in the community rating system, what can I do? Who should I talk to get my community up to speed?
If you're an elected official, and it's the city that has to put forward the effort, they have to do 5 points. There is a big, thick book like this that they can hire somebody to do it full time, but then there's like a little cheat sheet like this. And so you've got to get a minimum of 500 points to get it. Class 10 means you're not doing any effort at all. Class 9 is where you start getting a 5% discount. That's the 500 points that you accumulate through doing these very simple highlighted portions on this. But it is up to the city to participate in that, or the county.
Thank you, Danielle. We have a quick announcement. I don't have his card. Mr. Michael Larson, are you here in the room, in the back?
Yes.
He has some more information about Firm, which is, do you want to come up here and just give a little bit? You have an event coming up and you had some more information to give us. I apologize.
Yes.
Thank you. So sorry. Okay, sorry. Firm is fair insurance rates in Monroe, and you have an event coming up and you wanted just to give us the quick details because we don't have much time.
Okay. Well, in addition to Monroe County and Key West, all the municipalities in the Keys are now in CRS. That includes Marathon, Eldorado, Layton, Key Colony Beach. So that's a huge step forward. Fair Insurance in Monroe has been working for years to get lower windstorm rates and now flood insurance rates. And we really appreciate the efforts of Florida Realtors in lobbying for this, because the reauthorization of the NFIP is very important. Some things to look at is the National Flood Insurance Program pays the write-your-own companies over 30% of the premium for simply administering the policy. That's not your local insurance company. That's huge.
Give us the update on the event that you're hosting.
Yes, Marathon Association is doing a golf tournament that's coming up. I don't have the date with me, but it's coming up very soon. And
June what?
June 25th. And the Upper Keys is doing a fishing tournament August 11th and 12th. Fundraising for firm. Thank you.
Thank you. Thank you so much. And please go around, he has a lot of information, so please get him your card. See him, he's your go-to. Thank you so much, Michael. We went through this quite quickly because I know we have a lot to get through. Are there any questions from the crowd about things you can do? Any questions regarding flood insurance? I know we kind of skimmed through it. We could spend hours on this. Jacqueline.
Yes, that's, and also, are you talking, those are frangible walls, so they collapse when the water comes through?
Well, yeah, that's really the.
So that's sort of a coding issue, I would think, with the community. And let me just tell you real quickly, and thank you for bringing it up. So I was very excited to see my first mitigated home in the area where I live, and it was a home that they spent $500,000 mitigating and raising it because they were in the highest flood risk that there was. And I went there because they're now having to sell it. They just got done mitigating. I go, why are you selling it? They go, well, our flood insurance went so high. Well, they're in a Z flood, and for a Z, it certainly wasn't terrible. It was about $5,000 for a year for a home like this. And she goes, I just don't understand why our rates went so high. So I did some investigation because it wasn't making sense. They did put the frangible wall so that they could use it as a garage. Well, here was the key. They followed all of the rules that FEMA laid out for mitigation, every single one of them, including putting the walls, which is allowable because they'll blow out and can be replaced. They failed to ask one simple question. By doing that, will I be paying higher flood insurance? And the question is, the one with the gold rules, and it is yes, because it is considered an enhancement to the property. So when it was all said and done, we said, did you ever ask what was your goal? Did you want lower flood insurance, or did you want the aesthetics of having this? And she goes, well, I want a lower flood insurance, but see, no one thought, I always say to someone, always ask the question, what have I failed to ask you? What is it that I need to know that I can't think of? And so now they're either going to take those walls down to bring down their rates, which is a shame because it's nice, or they have to pay the higher flood and probably potentially move. So I'm just telling you, there's always pros and cons. You can follow all the rules, but there's always the second one with the gold. So just sort of keep that in mind. Well, you're talking about a LOMA, which is a letter of map revision.
Right.
So you can do that if you are mapped incorrectly. And she also asked about the smart fence. Those are a very effective way to reduce your flood insurance. Not good for every property because it's got to be efficient. They're for garages mainly or basements up north, but that they are efficient to bring it down, because usually what happens in some is you're in a higher risk just because your garage sits down a little bit, step down, and then you've got the water heater or air conditioner there. Now it gets you into a higher rate because if there's equipment, if there's equipment in that garage and it's just even a quarter of an inch below BFE, you're going to be paying a higher rate. The FEMA website, I won't even use a word that I'd like to in here, but it is awful. Okay, and you cannot get correct information. If they took down where you could put an address and see your map. Well, I'm going to tell you, someone that I know typed in their address. Now, I knew they were not in a flood zone, but all of a sudden what came up was they typed in the address and it was high risk, high risk, high risk. And the reason it was high risk is because they live 30 feet or more from a river, but the house was up on stilts, so it was way above where it needed to be. But FEMA couldn't tell, that's why the kind of mapping I'm talking about would count. And so think about that. Where does everybody look for a home? On the internet. You're gonna search, you go to FEMA, you see it's high risk. What happened to this poor homeowner if he was to sell it? People wouldn't even be looking at it or knocking at the door because they're going, I'm not paying high risk, so they have taken that down. You can't find that, but we're really trying to champion, if we could do Google Earth, or, and all the things that we can do, for God's sakes, we should be able to have flood maps that are easy for us to find.
What other questions do we have?
There's a draft already out from the House. We're reviewing it tomorrow. The insurance committee has some of the components. I mentioned the Senate was going to wait for the House, but from what I understand, they are also drafting a bill. So they're working on it now. What happens and where it ends up, I really, it could be anything, what it looks like in a draft and when it comes out, but there's some work to do.
Do we expect to see an update from NAR or Florida on that draft bill anytime in the near future?
Well, when there's a draft bill, then it's like we go back and champion what we think we need. Now, 85% of the bill is really pretty good, and it's what is in our proposed bylaws or our mission statement for insurance. But there's some things that we're a little concerned. I told you about the 3 for the 4 years. There's also a thing called scoring for mapping. None of us want scoring. So we have to make sure, we don't even have decent maps. How in the heck can we have scoring? So we're definitely fighting that. So I don't think, it's very technical right now, but I think you've got a lot of great experts looking at it. We don't ever want to see what happened before. So we're gonna make sure that, I can vouch you, we're gonna make sure that we're not waking up with big surprises.
Perfect. We'll take one last question.
I actually saw one reading that they wanted to extend it for 10 years. I don't know. I don't think they'll ever, what he said is that, are they looking at doing something longer than what happened before? And I said, I've seen one comment about it being 10 years, but I don't know. I don't know, until they can get the debt and how they're gonna do this and make it solvent, I don't know how they can make it more permanent, but that's just my opinion.
We'll do a quick plug for some of your call to actions. If you've ever received an email from President Maria urging you to click a button and send a letter to your congressman, it makes a world of a difference. They want to know your thoughts and your feelings. And Maria and I spoke about this yesterday, but she's an FPC for a freshman congressman. And she called him to let him know about insurance, and he says, I have no idea. Inform me, right? Because we know our congressmen are not experts, our senators are not experts on every subject matter, and it's up to us, the experts, to help them understand what's occurring in your area. So if you want to take an easy route, which is a very easy route, click the button, make sure that when you do receive those call to actions, you're getting them to your congressman. You want to take it a step further and give them a call, send them a personal email, because it's very important. And you can be the expert, you can help them. They look for that information, and you guys can be the source of the source. So,
Thank you.
we good? We're good on time?
Thank you.
Before we go, everybody stay put, everybody stay put. Thank you so much, ladies, that was fantastic.